Good morning, everybody. Welcome to the Flow Show. We made it to Friday at last. Can't wait for the weekend. Well, I don't know about that. My football team is playing again tonight. We might get embarrassed twice in the same week after getting embarrassed on Monday. So, yeah, I won't be too confident about us playing later on this evening. But that's for then. This is now. We've got markets to navigate ahead of all that. First of all, our sale 30% off all plans on our trader funding program. Use code SPOOKY30 because it's Halloween in a week or so's time. So make sure you get in on that code. It's available to current customers as well, all people. We don't try and do that new customers only business. So we try and keep our offers to everybody, give everyone a fair shot at those. Let me just put the link in the room for you. There we go. So get on board, take advantage of that sale. Once it's gone, it is gone. Right, let's get cracking. If I can get my mouse to work today. Right, just me and myself today. Kay's off getting his motor fixed. So, yeah, just me to see you into the weekend. Right, starting with China and some news out yesterday that major Chinese oil firms are going to suspend seaborne Russian oil purchases due to concerns about Western sanctions. A lot of laughing over this one yesterday. So, yes, they may well stop seaborne Russian oil purchases. That's oil that's then transported by tanker. That doesn't change the fact that they do share a border with Russia, so they can still get their oil out of Russia without ever having to touch the water. Shows the folly of that. Anyway, that was a sources piece. A lot of people saying that that story might be cobblers. It could be true, as I say, because it wouldn't matter in terms of not being able to, or stopping entirely getting Russian oil through other ways and means. Headline grabbing as it was. Anyway, we'll see what develops from that one. Over in Japan, Takeichi with a comment that I thought might have seen a bit of a stronger reaction in the yen. She said fiscal policy will be strategic and responsible, which doesn't suggest she's going to be letting off a few untoward cannons and bazookas. It says we'll create an economy that global investors will trust. As I say, that hasn't stopped the yen on its advance, or yen pairs on their advance higher, yen weakening. But we'll have to see what perhaps she feels is responsible and what the market thinks is responsible. Finance Minister Katayama hopes the BOJ maintains its market dialogue. Says hopes UEDA will communicate economic and policy views clearly. Says UEDA has emphasised the importance of maintaining an easy stance. Says there's no need to comment further on the Bank of Japan's policy director. She also had a 15-minute call with Treasury Secretary Bessent, saying that with Bessent on issues together. And that's me switching my squawk off. Yeah, just in case you missed that, says she wants to work on issues together with Bessent. We had some inflation data, national numbers out of Japan. Inflation numbers, headline inflation rising to 2.9% from 2.7%. One of the core measures doing the same, up to 2.9 from 2.7. However, one of the core measures dropped to 3% from 3.3%. It's the ex-fresh food and energy number, still pretty healthy at 3%. So as far as inflation is concerned, all tickety-boo for the BOJ. They are seeing sustained inflation stably above 2%. So that still remains a green light for further hikes as they see fit. It's also PMI day, and starting off in Australia, where manufacturing fell back into contraction at 49.7 from a prior 51.4. Services, though, jumped to 53.1. Over in Japan, the PMI as well, manufacturing looking a little bit softer, 48.3. Services also down a bit too, to 52.4. A bit of a surprise for the UK, a positive surprise for the UK. Retail sales, which I was expecting to look a little bit wobbly, came in positive. Headline sales were expected to fall 0.2%. They came in up 0.5%. So the spending still carrying on. Those year-on-year numbers looking pretty good as well. Again, that just shows you how sometimes September can be a little bit of a wobbly month after the summer. But that spending has continued. We'll see how long that lasts. It's been a surprising run of positive retail sales. I'll have to check, but I think probably one of the most positive we've seen if you exclude the COVID bounce back. Whether those sales can last through Rachel Reeves and her plans is another kettle of fish. She has, or there is rumour that she's going to raise income tax at the budget. Now, this is big for two reasons. A, they pledged not to raise taxes, and especially taxes like income taxes, but also things like that are likely to hit spending, so on and so forth. So this could just be part of a little bit of what we call kite flying, just dropping these bits into news stories just to see what the reaction is. And if the reaction is too adverse, then they do away with that policy. Or if it doesn't get a big reaction, gives them the green light to go ahead with it. Anyway, this will be yet another broken manifesto pledge by the Labour government. And she's been getting caned all over the social media and media about that. So slowly and surely, we're getting the super nuts of prospective plans for this budget. So we'll wait and see what other sources get dropped on us over the weeks ahead. End of November is the time for that budget. Bank of England's Dingra says, I expect US tariffs to lead to lower overall growth and some downward pressure on prices in the medium term in the UK. That has been borne out in the PMI data from the UK this morning, but before we get to that, we'll go through all the other stuff. France, their PMI came in just a marginal pip better on manufacturing, but services fell out of bed, down to 47.1 from 48.5, so still well in contraction there. Germany with some decent numbers, particularly in services. Manufacturing, though, that upped by 1 pip. Services jumped to 54.5 from 51.1 expected and 51.5 prior. Pretty good reading in the report there. Unemployment slowed. It looks like it has the potential that I think they've been losing jobs for like 17 months in Germany. So it might be that companies are now lean enough that they can actually start making some money again, and where growth suddenly starts becoming bigger and better. So it's possible, but we'll wait and see. We know that some of the other data and the zoos and the IFOs and sentiment stuff still down in the dumps, but PMIs are one thing and they're looking okay for that. The pan-Eurozone number pretty much dragged up by Germany there, showing green across the board there too. And then to the UK, where we got some decent numbers as well. Manufacturing saw a decent rise, 49.6, still in contraction, but closer to that magic pivot level at 50. Services saw a small improvement to 51.1. And as I was mentioning, prices, there has been lower price pressures coming into both input and output charges in the UK, which will be good news to the Bank of England. That manufacturing lift, though, while it may look good on paper, apparently it was a lot of it was down to restocking. So where people have burnt through inventories, they decided they wanted to stock back up again. There was a note of an increase in domestic demand as well. So not all a negative positive, shall we say, for that. Can it continue? Again, we'll see whether we've got the makings of a little bit of a trend, or are we just going to see things going sideways again? Back to France, because we're never far from the political mess there. Good news if you're Mr. Trump, he's going to love this one. I'm surprised he hasn't piped up about it already, but French lawmakers voted to hike their digital taxes on total, but it's going to hit American tech giants, as reported in the press. They hiked their digital taxes fivefold to 15%. Now, digital taxes is something that the US is vehemently against. So as I say, probably should expect some sort of comment from Trump on that. Not done there. Politics, headline just before the show started, shows that France's socialists, these are the ones who abstained from voting in a no confidence vote against the government. They are now threatening to oust the government because the bum fight continues over the budget, and they say they could enact that come Monday. So we could be facing the revolving door yet again on the PM's house and Hotel Matignon. We could find we're back into that game again by Monday if agreements don't get made. Just going back to data yesterday, not a lot out. We had Canadian retail sales, which came in a little bit mixed. Core sales were up 0.7%. That's ex autos. A little bit of a miss from the 1.3 expected, though headline sales came in as expected at 1%, reversing a negative 0.7%. Last month, they'd like to throw out a flash number for September, which shows those sales falling minus 0.7%. We got existing home sales. I forgot that this is a separate survey run by the NAR, National Association of Realtors. There's a lot to call them over there. So existing home sales came in up 1.5%, pretty much as expected. House prices, well, median prices staying pretty steady, up 2.1% over this time last year and up 2% over last month as well. So house prices still looking okay there. Back to Canada, and they've created a bit of a bum fight. It was announced that they were going to cut import quotas for General Motors and Stellantis, with significant reductions to auto import limits. As you can imagine, that got Trump red-faced. He put out a True Social post, a pretty bonkers one for him. He started off ranting about Canada's use of Ronald Reagan in a fake advert, pretty much dismissing the case for tariffs. So he took umbrage at that and said that all trade talks with Canada are terminated. So we have to see what further comes from that. But he didn't like what he saw from that. So that's a big bum fight. That saw the loonie weakening. We're trading back up through 140, been as high as 140.28. So we'll keep an eye on how that progresses. Over at the White House, Press Secretary Leavitt says the meeting between Putin and Zelensky is not off the table. They're still, even Putin in Russia is calling this a postponement, not a cancellation. So that still may go ahead, though we have to see when, where, how, why, which, and what. That's about it from the headlines. Still pretty quiet in between all the geopolitics going on. We do obviously have CPI data today to get our teeth stuck into, as well as the S&P global PMIs and we get a bit of Michigan as well, which will be the final numbers for October. So CPI, have they even got it on here? Yes, they have. We're expecting a jump in CPI to 3.1% from 2.9%. The core to remain unchanged at 3.1%. Now, just looking at some of the other metrics that we got in September, looking at PMIs and things like that, I think there might be a bit of a danger if we see hot inflation, that core might be a little bit higher. But otherwise, I don't know what's gone into this report, whether they've got all the details. They should have all the details for this one. I think we also need to be careful how it gets released. Maybe there's a delay. Who knows who's pushing the buttons over at the BLS. So it could be one of these things. If it doesn't drop straight away, we could just be waiting. So yeah, I don't know how this is going to drop out, whether we're going to get all of it, some of it, half of it, whatever. So be ready for a bit of a mess if it happens. If it all comes out tickety-boo, then everything will be fine. Now, unless there's a massive variation in these numbers, it's not going to really impact the Fed trade. The market knows what the Fed's doing. As I said, right at the beginning of September. September month was going to set the stage for the Fed for the next 3, 4, 5, 6 months. And this is where we're at. This is why we're not seeing the dollar moving around an awful lot. It's up, it's down, it's up, it's down. Same with some of the majors. The market knows what the Fed is doing for the foreseeable future. It's going to take a lot of data to change that view, whether it's hot inflation, soft inflation, jobs, or whatever. And we're not even getting all that data anyway. So there's no reason for the market to get out its pram unless there's some big, huge variations here. If we've got core at 3.5% and headline at 3.6%, then you're probably going to see a bit of a reaction. But otherwise, 2 pips there or thereabouts to expectations, and we're not going to see too much of a reaction bar some intraday noise. So just be prepared. This data will not change what the market really thinks about the amount of cuts that are coming. It will mess around the edges, but it won't make any wholesale changes. So just be prepared. A lot of people building this up, this data point, to be something that we should all be ready to jump on and going to move the markets millions of pips here and there. Okay, just be warned. Okay, react. Plot your levels. Look at if a price does go somewhere, what are you going to do with that move? Does it hit some of your levels? Is it breaking ranges? Is it not breaking ranges? And just trade accordingly with that. Aside from that, not a lot else out. So that, as I say, got the final Michigan numbers and the S&P Global PMI there. So that might even be more of a mover than the inflation data. Again, if there's big variation to the numbers in that. Manufacturing looking for a tiny pullback, as is services there in those PMIs. And then I think more a case of looking at the details, looking at the prices component and looking at the employment component, just to see if there's any wild moves there that might give folks a little bit of an indication what's going on in the labour market. So that's going to finish us up for the week. I think it's going to be another day of waiting for this bit of data, and otherwise just playing with the geopolitics and whatever stories are going on. So let's have a look at what's going on in pricing at the moment. Going to start with dollar yen, which is looking quite interesting because we've got this, I keep calling it the Takaichi top up here, 153.2025. It's going to be pretty interesting if we get there. I don't really know why it was so solid back then, but that's as far as the market wanted to let that gap open and the rest of the days unfold. So if it was a significant level there, we should give it that sort of respect if we get up there again today or whenever. Now, 2 things that can happen here. Either that is going to mark a pretty significant top again if we find resistance there. in which case we could see a fairly decent pullback. If we do, I'd be eyeing that 152 area level for a pullback if we complete that pattern. On the other side, we could break it. If we do, it's probably going to see another wave higher. We're going to be up to that 153.86 area, and you've got to go back a bit to start getting into some of the levels that we were there previously. So up along here, that 153.80s area, close to 154. For me, above 152, it's really all about the 155, which is another big old level that we need to pay attention to. If we get out there, it's a similar stature to 152. So that's going to be a real key level if we get up there. As you can see, when we were above it, we had a break under, reasonable size dip, and then the bounce back, ran into trouble. Not even that far from it. So that is going to be an area up there that you need to keep an eye on. But I can see scope for a move up towards there if we get above this 153's highs up here. So only looks like a smallish level, but as I say, it was significant back there through all the noise. It could be significant again there. Looking at the euro, which is not doing an awful lot. Even the data didn't bring too much of a move here. We put in a half-assed attempt on this 116.30, but it's dipped back since. The only thing that's looking mildly short-term bullish is that we had that low on Wednesday. We stepped up on Thursday. We might be stepping up again today. It's still all very short-term stuff, though. If we fail at 116, you're going to need to keep an eye on these two lows down here. But if you can't get above 116.30, you can forget about everything else going on up above it. Again, just look at this one over the data. Look to see, if it's strong CPI data, but we can't break that 115 70s area again, 70s 80s again. We have a test down there. That might give long some encouragement to try a little dip buy on that. Am I a dip buy in dollar yen if we get a low CPI today, Ali? Depends where it dips to. I'm not, as much as I thought this would enter a weak phase, it's not been anything that I've fancied actually buying. I'm not going to buy a small dip because we are still at the top of this rally. If we get something down to 152, maybe I'd have a little look. But I'd want a significant dip. I'm not going to be jumping in on a Friday afternoon on a 10, 15 pip dip after it's done all this as well in the last week or so. So yeah, I don't know. I may even look to sell that rally if it runs into trouble. And looks like we might be forming a top. So I'll be looking at what the price action does and reacting to that. But I'm loath to get into much ahead of a weekend. Dollar CAD, as mentioned. So there was that overnight headline from Trump. And look at where it topped out, just below this 33, 34 area. So we're just, again, struggling in this zone, this 2030 zone, which, as you can see, we've struggled there plenty of times before. It's been support, it's been resistance. It's becoming just a bit of a pivot area up there. And still looking constructive while we're holding above this level. We did have a little pokey below again, but didn't last long. We're back above. Now it's retaken, and it's just trying to hold this 140 level. So again, it's looking intraday bearish. Now today it's looking a bit more bullish. Obviously, those headlines driving as well. But can it have enough in the tank to bust up through these highs, get up to 60s, 70s again, take on those prior highs? I doubt it. But again, this one, it might be worth looking at on a dip on the data if the US and Canada are just about to enter in another round of grabbing each other's throats. If we get soft CPI data and we see the dollar dipping back to this level that holds again, then that's going to look pretty tempting. and I may have not traded it the last 2 times, but I might have a little punt on that one, just on the back of the getting in the fight mode, and then we see this pushing up a bit over the days ahead. But you never know, Mr. Taco Man. It could all be jelly and ice cream, and they all speak and get something done over the weekend. So always be careful when you're talking about geopolitics. Euro sterling, that was looking good. We had those good retail sales from the UK. That didn't see much of a dip. We were up, trading up here yesterday into the close. Then we got the UK data. We dipped back near the figure. Then we bounced again. Just managed to nick out these highs, but not by much. And now we're back below that 87.20 level. So it is maybe looking a bit more intraday bullish. I was thinking about hitting a dip down to the figure over the UK data. We didn't really get it, so I'm probably just going to leave this alone again. We're still waiting to see if we can break and get above this 87.20 level. That's going to be your first clue that we're heading higher. But we cannot hold a move above there for love nor money at the moment. So until we do, forget about it. You certainly don't want to be chasing it up here unless you're in for a bit of scalping. It's really just a tight old mess going on. Yes, I'm long both, Ali. Where should we go from here? Cable. That was testing the 133 figure. Managed to hold it. We again have seen a bit of a bounce after the UK PMIs. That put a bit of a floor in, but the bounce is looking very, very weak at the moment. So I would not be surprised if we ever break down here, and we'll have to see if it's data driven. That's one thing. If it happens without the data, that's something altogether. So just keep an eye on this. If we're closing today below 133, then it's going to look a bit iffy, and we might probably have a push down to at least 132.50s and then see what happens there. Look at some of the other bits and bobs. Let's see what's going on in gold. That's back down again. So it's rallying pretty well. Well, it rallied pretty well off the 4,000 level. But this 41.60s, 59.60 has become a bit significant. Let me chuck an old line in there. Oh, get rid of that thing. So that's boom, boom, boom. So that's a level we know we need to keep an eye on now, because we, again, a bit of a double top forming. We have come back and we're messing with this 59.60 level, which has been a bit washed out. So might need to revise the strength in that level. We know what the main level is going to be back at this 4K. And if we get another test there that holds, then we should probably expect a reasonable bounce from that. But I would say if we get a test of this 4K level and we bounce back to 40.60s, 40.80s, even the 41 figure, and we find resistance there at any one of those 3 points, then it's looking a different picture. And then I would expect we'd see a 4,000 break after that. So if you've been looking at this 4K level, and I know a lot of people in our room have been looking at this 4K level, just be careful if we do bounce from there, but that bounce doesn't go too far. That won't be a strong looking move, and it will set up the chances of a break down, because you shouldn't always just blindly trade a level because you were going to trade it 2 days ago. Doesn't mean you should blindly trade it again. Know the reason we're getting down there. Note the price action if we're getting back down there. Or we could just hold here. And if we do hold here and bounce back to this level quickly, then on the flip side, be careful if you've been shorting up here, because a third test in quick succession could be the one that breaks, and then we're heading back higher again. So monitor the price action. Stephen, it's crazy to me that national country matters are dealt with over social media. Yeah, you're absolutely right. Those are the times we live in. which in one sense is good because you're getting those thoughts quickly rather than reading them the day after in the newspaper or watching them on the news or whatever. So there is positives and negatives to it. The positives is, as I say, we get that information faster, which means we can potentially react on it to trade. The downside is it's an absolute flood, and 99% of it is absolutely useless to our trading. But you only need the 1% to make money on. So don't look at too much. Looking at oil, and yes, I'm going to be looking at the continuous contract because I'm lazy. So Mark can jog on, doesn't need to tell me off. This 61, 62 area has been a significant level. It's been a significant level going back quite some time as well. So it's an important point we're at here again. Can this be sustained? Can we get a move back above this area, put us back up towards the high 60s, mid to high 60s? Got that whole zone around there to keep an eye on as well, the bottom of which became resistance back in August. This is all just the to and fro of what's going on with China and whatnot and everything else. Fundamentally, I don't think there's much of a case why oil should be shooting higher, but levels are levels and prices are prices, and they're going to go where they're going to go. Quick look at yields, because tens are trying to get back up into that 4% mark. Just got their nose above at the moment. So this might be looking a bit of a short-term fake out. We have been staying down below there for pretty much a week, but if we close back above there, that's going to be a little bit of a support for the dollar. You'll note that dollar yen has not really been paying much attention to yields at the moment, so that correlation is completely off the rails. A lot of that due to what's happening in Japan. But just keep an eye on, if we do get back on that bandwagon, that getting back above and holding above 4%, pushing back up to 420% is going to be a little bit of a tailwind for dollar yen probably as well. So that's likely to build the case for longs and a break of that 153.20s area. Dimmy, the NOK pullback offering a change to Euro NOK. Let's have a look at that. Don't know what to make of this one, mate, personally. To go short, well, you could say there's a possibility for a short, but we're just ranging a bit. So you've got both sides of the argument here. You know, you can potentially think about a long down here into 1153, 54. And you look to short it up here 1180s and just play a bit of a range, but there's no real trend in this one at all. So do you want to be shorting it down here or waiting on a rally? If you've been long and you're down here and you're now thinking about shorting it, well, that's a bit dangerous because you're trying to flip, but you're trying to catch the moves when there's no real moves happening. Like if you were short up here, as I say, and you're getting out here, fine. But I wouldn't be looking to short here. Short a rally, potentially, yeah. But I wouldn't be looking to flip unless you're breaking down through there and some of these other levels lower on. So let me know what you're thinking of doing. I know you're saying maybe change to a short. Where are you going to short it, though? Addy, I think our views have been pretty clear about the Bank of Japan. We're in the window. October was on the table. Now it's off the table, I think. I wouldn't say the risk is zero, but we are in the window. I know Kay's putting his money on December. I think that's absolutely open. I think as I say, we are in a window between now and March. This is the Bank of Japan, okay? They're not the ECB. They won't say, you can't make a clear distinction on a date. So yeah, can they hike? Yep, I think they're in the window to hike between now and the early part of next year as they see fit. But Eddie, why does it matter? What are you going to do with a BOJ hike? Because they're going to hike maybe 25 pips. Do you think dollar yen's going to fall out of bed, or yen pairs are going to fall out of bed if they do hike by 25 pips? So let me know why you want to know about the BOJ and hiking. Risk for longs. Your risk is really a confirmation move. Well, there's two risks: how hawkish they are when they do hike, and as I say, your confirmation move. A 25 pip hike that's been expected for the last year, okay, should not move the market 500 pips. Okay, you might be lucky if you get 40, 50 pips out of it. So if you're long yen pairs and you're long for any other reason other than the Bank of Japan, then you should be pretty safe still being long, as I say, because the move shouldn't be too big on what we already knew had been coming for a long time. Your main risk to longs is if they say, well, we're going to keep hiking, we're in a phase now, we're going to take rates maybe up to 1.5%. That would be a very hawkish shift, and that would mean they're going to be hiking faster. That will have a bigger reaction in the yen. But even if they hike once more and say, yeah, we've got the conditions to keep hiking, but we're going to be happy at 1%, i.e. another hike, again, that's not a huge amount to see yen strengthening massively. So I'd look at it more as if you get a bit of a surprise from the BOJ or get a bit of reaction, look at what yen was doing when that move has happened or when that announcement has happened. If we're still trading up at 153s or we're trading up to 154, 155 because of Japanese policy or weakening dollar or whatever's going on, and the BOJ hike and you get a dip, that's probably a dip to buy rather than be worried about your long position. So it's easy to say now what I think the BOJ will do in general, but the price moves you have to judge at the time because you don't know where we'll be when they hike. We could be at 160, we could be at 130. You have to know what the market is doing the moment that you get that BOJ move, because then you know how to react. So unfortunately, I can't sit here and say you can do this, you can do that, you can do the other until we know what they're going to do and what the market's doing at the time they do it. Right, anything else for anything else before we shut up shop for the weekend? Speak now or forever hold your peace. Not sure what else I want to look at. I'll have a quick look at the Aussie. Oh, Euro Swiss. Oh, gone in, Ali. Let's just have a look at the Aussie first. I know a lot of people like to look at this one. It's getting a bit similar to a lot of pairs we're seeing, a bit similar to Euro Sterling. Bit of a blockade up at 65.20s. Bit of a blockade up towards this 65, 10, 11 area. We had a little look above yesterday, couldn't get up to any of these highs. Another failure. We've got 64, 75, 80 down below. So this is a very tight range we're in. So really, you want to be looking at what happens if you start breaking out. The only problem you've got is that you haven't got far to go breaking out the top 2025 before you hit the next potential barrier, 10, 15 pips higher. The significant level on the downside, though, is this 64.40, my age-old number there, which had two pretty significant bottoms there. So another one down here, if it holds, probably see similar action, but just be a bit careful on a third test down here that comes pretty quickly. But for now, a lot of range trading going on, things pretty much locked up. Ali, my Euro Swiss, sevens has been my lucky number. Got in at 17. I've cut at 27, 37 and 47 so far. Didn't get anything at 57. This is still looking fairly constructive, at least on an intraday basis. We are just stepping up the lows, but nothing changes, as I've been saying, until we get through 92, 55, 60. Derege, Euro yen, looking very similar to dollar yen, where we had that high, called it a Takeichi high as well, so we're up close to there. So similar picture here as dollar yen, Derege. What are you going to do with it? You're going to try a short at that level, or if you're long, that's certainly somewhere you'd be sensible taking some profit in case we don't go on and break it. But if we do break it, we're probably off to the races again, and then we're heading much higher. So yeah, off to fresh highs and highs and highs if we break that level. Where we pull back to, though, will be key if we do find a top there, where we're looking probably around this area down to the low 117s. If we do top out there, more significant. Let's get some lines in there. So where was I looking? Yeah, round about there. Let me change my colours. And then down into there. So those are two sort of reasonable areas you could potentially look for a pullback if we do top out at these highs. Once again, you have been long the Reg. You still long? If you are long, what are you going to do up here? Yeah, I certainly think, given how that top, trailing stop, if I was long, I'd definitely be looking at taking some profit, a little bit of partial into that, just in case we can't break it, and then getting your trailer up and just protecting it. Euro CAD. Right, what are you doing, Mel? I know Kay was talking about this, and a couple of people in the room are talking about this. So we got a little bit of a bottom into this area down here. Couldn't quite get down there, but could call that close enough. Seeing a little bit of a retrace back up. Probably a lot of this again is more down to that CAD move that we saw in dollar CAD over that bum fight. So this just might be one of those ones where that news has just stopped this trend that we've seen over the last few days. So if that trend gets back on, then you're probably going to see rallies running into a bit of trouble. Might find a bit of trouble into this area around here. Otherwise, you're looking a bit higher, up to 63.5. Right, I'm going to call that a day because my voice is just about to pack up. So, thank you very much, everybody, for coming to the Flow Show this week. Hope you've had a good week's trading. It's been a bit of a difficult one, just to get these moments of quietness, and then the geopolitics headlines suddenly moves markets and that. But that's the world we live in at the moment. Take care, everybody. Have a great weekend. Don't forget to take part in that sale on the trader funding program. And thank you, Derege. Thanks for that. Need all the luck we can get. Have a great weekend, and we'll see you all next week.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.